Welcome to 2024. Happy New Year. And at the beginning of every new season, we like to review what happened to the stock markets last year. And maybe they'll give you a little bit of a clue to the future. And Frances Horodelski has joined us for the last couple of years to do that job. And she's going to be here right after this break. Frances, Happy New Year. Welcome to
Happy
2024.
Happy New Year to you, Pat. I hope it's a good one.
Okay, let's start with sort of high. Let's start with an overview of how the markets, you perceive the markets last year.
Well, I think if you remember, we came into 2023 with people, to a man, to a woman, a recession was expected. It was across the board. It was going to happen imminently. But despite that, we still had central banks raising rates. We had a horrible 2022. The market was, on its back in a bear market, to use a term. So we came into 23, recessions expected. Banks were still hiking rates. Everybody was bearish. And guess what happened? We probably had the best year, especially in certain parts of the market, the best year maybe ever, and ended the year at all-time highs. Kind of crazy, actually.
Interesting. I went back to our conversation a year ago, and you weren't quite as bearish as that.
No, because I'm a bit of a contrarian, not more than a bit. And, you could feel there's always a wall of worry, of course, in capital markets. But that wall was so steep, and every smart person was bearish, it seemed. And when everybody's bearish, smart or dumb, there's usually an opportunity to take the other side.
Which you did. Okay, so then that's how the year started off. Nice little rally. It got a little wobbly.
It did get a little wobbly because the central banks were still tightening all around the world. And that caused havoc in the bond market. If you remember last March, that bond market havoc, or prices falling as rates rose, that caused a lot of dislocation on bank balance sheets. And we saw some bank failures. And that got people unnerved. It didn't actually upset central bankers immediately, although there was some short-term liquidity added. They went back to their tightening. But in the middle of the year, most central bankers kind of went on pause. And I was listening to somebody yesterday who said, you can look at all the macro stuff you want. Housing starts and everything you want, but really pay attention to bankers, central bankers, and what they do or say usually dictates, probably more what they do than what they say, dictates what happens in markets. So once they started to go on pause, and then that funny little thing called artificial intelligence, which was actually introduced, ChatGPT, I was an idiot. ChatGPT, I think, got first introduced in November of 2022. I was like an early adopter. I downloaded the app and I was on there. Never in a million years saw what happened as 2023 unfolded. But that got the speculative juices going. And and so that's what took those tech names through the roof.
Let's talk about those tech names, because it wasn't that long ago, a couple of years, that we talked about FANG. It was Facebook, Amazon, Netflix, and Google. Of course, Google's changed names, Facebook has changed names, but there's now 7 of them that people look at: NVIDIA, Apple, Alphabet, which is the old Google, Microsoft, Amazon, Meta, which is the old Facebook, and Tesla. That's the magnificent 7. And they really were driving the markets, weren't they?
They were. I think that a lot of people looked at that, that disproportionate weight of those 7 names in whatever index you look at. And it actually, they did very well. Don't get me wrong. They were just tremendous with, again, a lot of ups and downs. Tesla went up and down. NVIDIA got cut in half, I think, at one point over the course of the year, and ended up, I don't know how many fold, 2-fold, 3-fold. I don't have it in front of me. But it didn't mask. So people were worried about that and saying, oh, it's only those 7 stocks. Well, there was a lot going on underneath. Where other names started to percolate and get better, other technology names, and different names in each sector. And the new high list actually expanded. The new 52-week high list expanded over the second half of the year. And so that it was actually broader than just the seven. The seven were certainly leaders, but there was enough, oomph underneath, if you will, that allowed them, the broader market, to participate.
Let's talk about the stocks that didn't have oomph, in part because they'll
Yeah.
play into the Canadian discussion, but I want to save Canada till later on. Energy. I'm looking at a kind of a yo-yo, but oil was still down 9% at the end of the year. Natural gas, I read your newsletter, down 44%. I kind of missed that one, to be honest. Coal prices dropping 60%. The only plus was uranium up 80%. What are your thoughts on traditional, if you will, energy?
So energy was the sector of choice in 2022. It was the leading sector. So that was flag enough for 2023. I think there was a lot of different things that happened over the course of the year, including in 2023, a lot of Russian energy kind of filled the gaps. Smaller OPEC countries filled the gaps where there seemed to have been in 2022 worries about supply constraints. Supply constraint didn't actually happen in 2022. In 2023, to the extent that people thought it would, there was constant worry, of course, about the demand profile, and that demand was going to be hurt by a recession, which actually didn't happen. So there are all these little bits and pieces that, and I wouldn't underestimate the impact of so-called paper barrels. And paper barrels are when speculators move the market. And I think that was a lot of what happened early or late in 2022, early in 2023. The speculators were really long, and then they got, less long as the year progressed. And in fact, the hedge fund guys who are paper barrel buyers, they're essentially out of the market now. The speculators are low in terms of their participation. So you see that ebb and flow. Every year the supply demand profile is relatively in balance over the course of any one year, but you have all these swings. And energy stocks, at $70 where we are now, give or take, these companies make a ton of dough. I mean, a lot of money. And some of the Canadian names, by the end of 2024 or 2025, are going to be debt free. And they are, I mean, I hate to get so excited about it, but, and excess free cash flow is going to go to shareholders, not into the ground. It's going to go into shareholders' pockets. 2025 is a long way away, of course, but I think there's opportunity in the energy patch. Always geopolitical and all kinds of other things that, drive you crazy. But I think there's good valuation in the space.
I'm writing that one down as an idea for the coming year. Hey, I'd love your thoughts too on, while we're on the subject, alternative energy, green energy. How investable is it? And do you think that's a real thing in the future?
So 2022, more 2021, but 2022 a little bit. Alternative energy was a thing. I mean, they were, again, through the roof. There's a real speculative element to the renewable space. Some companies don't make money. They've got, ideas, but no revenue. So there's kind of a lot of that going on. And then last year, the bloom came off of the rose. Lithium went from, I think, 70,000 a kilogram to 12,000. That these things are going to be needed. There is going to be a transition to more renewable energy. And I'm partial to some of the big names again, those companies that can buy other companies that have revenue, that have profit. So I think this is a transition year for renewables. And you can see that in EV, electric vehicle demand. Everybody says it's going down. Well, it's not going down. The rate of growth is slowing. So that got everybody a little antsy, but I'm not a Tesla bull, but there are opportunities, I think, in what do they used to call it, the pick and shovel side of EVs. So your copper, which did not have a good 2023, lithium. I think over the next couple of years, you'd be well suited to have some of that in your portfolio. Not, you don't have to go nuts, but.
Well, the province of Ontario is buying into that too. They're looking at making major investments in electric vehicles. Let's move on, because one area in the United States that a lot of people were talking about was healthcare at the beginning of last year. What happened?
Well, again, I sound like a bit of a broken record, but rotation has been, if you can take one thing away from this conversation, it's rotation, rotation, rotation. Three things as it happens. And again, that was defensive positioning coming into 2023 because the recession was around the corner. And the recession didn't happen. Some of the big names struggled. You think of the Pfizers of the world, Bristol Myers. The only two real winners in healthcare were Novartis and Eli Lilly, because you can now take a pill to lose that weight.
Ozempic, right?
Yeah, Ozempic. The GLP-1s is what they're called. So that was the only area that really did well. A bit crazily, I think, but there are people smarter than me that know better. But again, there was defensive positioning, and as we moved through 2023, they became more aggressive. There were individual company problems. And we're starting this year actually with a rotation a little bit back to it. Some of them are good value names. There's a lot of M&A going on in biotech. So that's kind of the speculative end. And I think in the end, there's still going to be a need for new knees and hips. Everybody says, oh, you're going to not be fat, so you won't need new knees and hips. I don't buy that. So I think the medical device companies will do well. I think other companies that are investing in non-fat reducing drugs will still be needed, whether it's cancer or arthritis or other ailments.
Especially in light of an aging population.
Yeah.
When you talk about the expectation for a recession last year, people said consumer staples were not the place to be. What were your thoughts then, and what are your thoughts now?
So consumer staples would ordinarily be a defensive sector. The problem was that early in the year, they benefited from widening margins because they were able to push through price increases. You also had, what do they call it, shrinkflation. So, you same price, smaller package. So margins were under pressure for a number of those companies. And even just recently, I don't know if you've been following in France, Carrefour, the big supermarket, doesn't want any Pepsi products on their shelves because they said they're gouging them. So this is working through the market. Plus, you're not going to eat as much because of these drugs that suppress your appetite. So you're not going to eat potato chips and pizza, whatever. And so there were a lot of cross currents, I'd say. And the group wasn't particularly cheap when you look at it relative to the market. So it's really stable companies, but not the cheapest. So you really have to cherry pick your way around, where the opportunities are going to be.
Interest rates moved higher, they were in that transition at the beginning of the year last year, and banks were certainly, because of their dividend yields, saw a lot of movement as well. Is that providing an opportunity, do you think, now?
If I'd done this a month and a half ago, I would have said, load up the truck. They've had very, very good moves, both in Canada and the US. So you want to be a little circumspect about jumping in. But that's more of a timing thing. I think the Canadian bank dividend yields are still very attractive. I think they'll do well, generally speaking, especially in areas like the investment banking side, because I think M&A is going to pick up this year. I think capital markets will be all right. The mortgage side of the business in Canada may be interesting, to say the least, in terms of both, the ability to meet your mortgage obligations. So that's a negative for the banks, but also the ability to get a mortgage. And the size of that market in Canada is going to be tough, I think, to really expand. But Royal Bank's going to do an acquisition that's going to help the company. The Canadian banks are cutting back on costs. And if, in fact, we see a little bit of easing in central bank, at least not continuing to go up at the pace they did over the last year and a half, that would be beneficial to bank margins. So, I remember, I don't know if you remember Fred Ketchen, but from years ago. And Fred used to always say that the perfect investment strategy for Canadians was to buy Canadian banks and a lottery ticket. So I'm not big on the lottery ticket, but certainly having Canadian banks in your portfolio, you do have to swing, and some will have warts. I mean, certainly Bank of Nova Scotia has been the worst performer over, you name it, any period of time over the last 5 or 10 years. So, some are going to do better than others, but you want to have some banks in your portfolio, I think. And it pays you to wait.
Well, you mentioned Canada, and you think about inflation, for instance, on the sticky side, both north and south of the border, but we also have the housing issues, as you point out, in the big centers in particular, Vancouver, Toronto. They seem to be softening a little bit. That's going to play in the banks and a lot of other different areas. Never mind that we've got, politics galore north and south of the border.
Yeah. So I'll address housing first in Canada. I don't know how it gets solved in any quick fashion. There's a lot of money being thrown at it by various provincial and federal governments to increase the stock of homes available for purchase or rent. It takes time. So, I mean, and in that environment, with immigration still very high into this country, people got to live places. And many of the immigrants coming, whether they're temporary students, they have a lot of money behind them. And they don't really seem to care about bidding up real estate because they want money from wherever they're coming from. And so I think housing keeps a firm bid under it, and still a problem. So in the U.S., it's an entirely different dynamic. People can get a 30-year mortgage in the U.S., and a lot of people have 2 and 3% 30-year mortgages. That doesn't happen here, of course, as you know, every 5 years at the max, you've got to roll it over. Elections, well, there are at least 50 globally from this in 2024, from this coming weekend. Well, the 13th, Taiwan goes to the polls. So it's bracketed by Taiwan at the beginning and the US at the end. And you can almost name any country in between where there will be an election, including Russia, but that's like a done deal anyway. And will Canada have an election? Well, I'll leave that up to you. We don't have to go to the polls, of course. And it does not appear that our prime minister is willing to accept what the polls are telling him. So I doubt Canada will go to the polls this year, but you don't know. We'll see.
Yeah, absolutely. We will see. You haven't touched on inflation, sticky inflation in particular, north and south, and the central banks. And I mean, we began the discussion by talking about how central banks drive everything that's going on. What are your thoughts on inflation and central banks?
So the inflationary, and I might have said this in January when I talked to you, is that I thought that 2023 would see an easing of inflation almost purely because 2022 was so bad. So it's that base effect, year over year, the numbers are really high, and then you get numbers that are a little lower. So you get some easing on that count. 2024 is going to be a little different on the comparative side. It will not be as easy. But I think, and wages are still going to be the sticky component, both in Canada and the United States. The US has some different idiosyncrasies in how they calculate their inflation. So that's likely to continue to fall. Canada will be a bit stickier. And I think that will keep the central banks from cutting at the pace that people are currently expecting. the Federal Reserve has said 3 cuts in 2024. The street's saying 6. So somebody's going to be wrong, and I think it's going to be the street. And so inflation will come down, but I don't think it's going to be at 2. I could be wrong on that. I'm not an economist. The one positive could be imported deflation from China. China is deflating, and we get so many goods from China in North America. That may be one modest positive, additional positive on the inflation front in this side of the world.
So many markets around the world finished off the year in great shape. Do you see that continuing through the balance of the year, or are we looking at a flattening? What's your call?
Yeah, I'm more glass half full than glass half empty. So I would say that I think we're going to get a more volatile next few months. And then a crazy volatile end of the year in the US. I think the Iowa caucus is 10 days away, maybe, or next Monday, maybe. So as I don't even want to go down that road. Sorry. So I think that's going to be, in the end, it doesn't matter, but it will matter as we go through the process. So I think this year is going to end up higher maybe than it is now, but not a lot higher, with a lot of rotation in the middle of it. How's that for a wimp out in terms of a forecast?
That's a nice safe bet. I'll give you that. But I mean, who knows? You could have a perfect crystal ball.
As somebody says, nobody knows.
Frances, it's always great to come to you regardless to start off the year.
Thanks very much for inviting me.
Frances Horodelski.